worst sign, though, is what's working. The stay-at-home stocks are roaring again, trouncing their in-person competition, and the chill man sees that. Take Disney versus Netflix. Disney put on a fabulous show last week. I just thought it was fantastic. I read it. It was great. 300,000 people watched it. Made you feel like they own the entire pop culture firmament. And then the stock gained more than 20 points. But it's hard to see the parks or the movie theaters reopening anytime soon, given what's likely to be an uneven vaccine rollout. We're seeing that already, right? Meanwhile, Netflix has languished as the market lost interest in the stay-at-home stocks. Well, guess what? Today, Disney stock got clobbered and Netflix surged. These are just two sides of the same coin. I like Disney a great deal. I don't recommend selling because I expect the vaccine glut by April. But for now, home entertainment has edged out the Magic Kingdom, Netflix. Although I have to tell you, I haven't liked anything that they've done lately. You guys been watching any of this stuff lately? Unwatchable. I mean, what's the deal? How many times do you watch The Crown? That's one of theirs. All right, anyway. You know what else rallied today? Amazon, as he used to say. The stock's been biding its time lately, but this newfound fear of COVID has breathed new life into the king of stay-at-home shopping. You see, the stock was up. Even when the market started rolling over, they couldn't get this thing down. Meanwhile, the counter-urban trade is back. People are fleeing the cities for more spacious homes in the suburbs of the country again. And that's why Lennar, the big home builder, is flying ahead of its quarter on Wednesday, even though Toll Brothers got clobbered last week. I love the city, but it has a lot less to offer when all the restaurants and entertainment venues are closed, especially if you're working from home. What else? We got a huge takeover bid for a middling company, Astrazeneca, to buy Alexion. The pin action led to a fabulous rally in all the biotechs because they're all in the same ETFs. But it also reminded you that this is what you buy when there's a slowdown. Social media stocks are what you buy when there's a slowdown. They came back to life, even though the FTC is clearly gunning for them. Again, that's a stay-at-home trade, isn't it? And by the way, the Facebook and FCC, that story went away pretty quickly, didn't it? The ultimate stock at home, the ultimate stay-at-home stock, well, of course. Do I have to even tell you? Peloton, rocket higher. A sure tell of what the market's fallen back in love with. Finally, so many investors have written off the semis lately because they want to have the oils. It feels like everyone was selling AMD or NVIDIA to buy BP or Conoco. Oh, that's over. Today, the commodity stocks broke down. The semis made a huge comeback, and it's not done. You don't get a one-day rally in the semis. In short, today was a classic rotation out of the recovery plays and into the COVID winners. Of course, rotations can reverse themselves in a heartbeat. Tomorrow could be the exact opposite. But you know what? This market's been waiting for this vaccine for so long that we can't honestly treat it as news. It's not news. We acted as if it was news. The only real news was that Canada did it before us in Britain. At the same time, the latest wave of infections keeps getting worse. That is news, and it will keep hurting us until we slow the spread. But hey, at least we know how to play it. The FANGs, the semis, the digital facilitators, the Twilios, the Shopifys, the Adobes, the Pelotons, they're all roaring again. Bottom line, the recovery stocks are handing the baton back to the lockdown winners because lockdown is where we're headed. Nobody wants to shut down the economy. Forget that ruse, even partially. But with infections exploding, hospitals overwhelmed, and the horrifying death toll, even the COVID doubters who think that it was just a hoax are starting to take the virus seriously. And they'll buy the work-at-home, stay-at-home stocks as a natural extension of their views that finally got through their heads that this is a bad disease.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.